Hey there everyone, it's Joe from Ainslie's Gold Silver Standard Insights, brought to you by goldsilverstandard.com and ainslieBullion.com.au. Today's topic is hot, sticky mess. What's happening with New Zealand? Now that's posted on the Ainslie website. I'll put a link below for you to follow along. Of course, we have Chris Tipper here to break down the morning's news. And joining Chris today is regular contributor, Ainslie team member and data analyst extraordinaire, Josh Lang. So gentlemen, over to you.
Thanks, Joe. Just this morning, the Reserve Bank of New Zealand came out with their largest ever rate rise of 0.75%, taking the benchmark from 3.5% to 4.25%. Such a large rise should arguably not have been necessary, but was obviously considered essential to bring a rapidly deteriorating situation under control. So the obvious next question becomes, with New Zealand finding themselves caught out and behind the curve, are we likely to experience the same fate here in Australia, where the RBA has been much slower in raising rates than other central banks around the world? So to explore that current situation and the implications today, we're joined again by Josh. So welcome back, Josh.
G'day, Chris. Hey, mate.
Yeah. Thanks for joining us. And can you maybe give us a little bit of an overview, just to start off, of what happened today, and a little bit of that background about why it was felt necessary to have the largest ever rate rise in New Zealand?
Yeah, it all came down to inflation, Chris. So inflation in New Zealand sitting about 7.2% per annum, and products made locally for the domestic market and domestic consumption are at 2-decade highs. So things aren't looking very good there. They also have wage inflation at record levels, and those inflation expectations haven't eased, which is why it's been so aggressive. So while inflation figures, coming out of the US and maybe some other places in the world have been a little bit better than expected, our friends across the ditch, they're still actually roughing it out. And they're potentially even still looking down the barrel of an inflation spiral, which is why they've gone so hard. So quarter three inflation proved to be way hotter than expected for NZ, coming in at 7.2% versus the forecast, which was only 6.6%. And even though unemployment remained tight at 3.3%, wage growth was only 2.6%. So New Zealand-based economists were very, very, very hawkish before it, with all those factors in mind. They expected the hike of 75 basis points. But despite the New Zealand-based people thinking that, the rest of the market actually effectively priced in a 50-50 between 50-point and 75-point hike, which is why we would have seen that. So, the deteriorating economic backdrop resulting from lower demand globally, the continued Chinese lockdowns as well as a housing downturn in New Zealand, and especially lower dairy prices as well, which is New Zealand's main export, would have absolutely factored into that decision of 75 basis points.
Okay, so a lot of those factors seem to be quite New Zealand specific, and I know there's a lot of forward indicators starting to come out to suggest that the pivot may occur, even if it's not occurring in terms of central banks elsewhere in the world actually changing policy, but certainly slowing down, because the focus of attention is probably going to shift to growth, because they're worried about losses of jobs and just generally growth slowing down. And we've seen even more job losses starting to flow through in the tech area recently. I think HP was another one, laying off large numbers of their workforce. So is that, I suppose there's two parts to that question. Is it a New Zealand specific question, specific situation, or is this an underlying issue, something that might be experienced elsewhere? Because is that really the start of stagflation that's going on there that might be something we have to worry about?
You're right, Chris. Yeah, I think stagflation is the big worry, and why a lot of people kind of expect a pivot to growth, because the outcome, if it doesn't turn to growth, probably is stagflation. So for people who don't know, stagflation is when we see prices rising, so inflation, but the economy is still slowing, which feels pretty applicable at the moment. And there's compelling arguments to be made that we are pretty much in one, or about to be, especially for places like New Zealand, where economic activity is growing slowly. Underlying economic growth measured by productivity changes has really slowed down. real wages not even close to keeping up with inflation, except for those, funnily enough, in the banking sector, Chris, as well as some in shipping and oil industries. The only missing part, I think, in the stagflation equation, if you want to say, is that by the books, stagflation must see slow economic growth, rising inflation, and high unemployment, which we just haven't seen that last one just yet. It's still sort of hanging there. But like you
But
said,
you were effectively saying the opposite of that, weren't you? That New Zealand actually has still shortages in filling jobs.
Yeah, exactly. We may be seeing some of the early signs of it, I suppose, like you said, Chris, with the tech sector, but it hasn't rolled quite through yet to, I know, here in Australia and especially New Zealand as well. So yeah, yet to see that in unemployment, and I really do hope it stays that way, because full swing stagflation is, as we know, the worst of all economic worlds. It's the worst one to have if you want to pick one. So the general consensus is today the decision was to prevent that, which is, it's trying to cure what has already been set in. So the key for central banks and policymakers is to be proactive in avoiding that stagflation worst of all worlds scenario, which is why they've ended up going with the 75 points. So yes, while I suppose 75 points is a lot and it does hurt, especially for those with mortgages, maybe it doesn't hurt as much as what long-term stagflation will.
Yeah, and that makes sense. So, and I suppose to sort of summarize what you said there in terms of what I was asking about Australia as well, maybe New Zealand is a bit of a blueprint there, but it could be a different set of circumstances and a different situation. So it doesn't necessarily mean that we will be aggressively raising over the next
in their steps. Yeah, they're a completely different kind of economy as well, similar to us, but very unique.
Okay, so we can maybe breathe a slight sigh of relief there.
So deep breath.
But for now, at least. Can you talk me through a little bit about what happened to the New Zealand dollar after that announcement? Because I know we have been talking quite a lot over different with different guests and over a long period of time about the US dollar, and the New Zealand dollar here, or any other currency, is the inverse of that when you're looking at the pair. Absolutely. So what did we see happen there? And is this a bit of an indication of what's going on more broadly with the US dollar as well?
Well, yeah, the US dollar gave up a lot of its gains, and the New Zealand actually had a really, really good month, unlike their Rugby League World Cup team. Didn't make it to the finals. But the New Zealand dollar was a very notable gainer ahead of the rates today. So the remarkable run for the Kiwi faces an interesting test here, with the somewhat bearish sentiment after, a quite strong month of performance, and obviously you are battling directly with the US dollar, which is on a hell of a trend. The market's
that has had a bit of weakness recently.
A little bit of weekness lately, correct.
Yeah.
But the market will and has, will react to what these rate rises are. I imagine it'll start making a move if it hasn't already, based on that. But like you said, Chris, it's all down to the US dollar. We've always said that here. Yeah.
Okay. And that is still something we need to watch and see how that unfolds, I suppose.
Yeah.
And you're not really allowed to use rugby talk at the moment in the office. It's only World Cup. That's the only one you're allowed to talk about.
It's all soccer or football now in here.
Yeah, and for now, for this period of time anyway. So can we also then look more generally there about gold, because obviously that's something we're very interested in. When you see a situation like what has happened in New Zealand and the need for them to raise those rates, how do you see that playing into the gold price or precious metal prices? Is that something that you would see as bullish long term for gold? Is it something that keeps it really uncertain period of time ahead? How do you read that?
Yeah, when I was looking into it today and reading this morning's news as well, it just reminded me of why we need gold. Like, we've got this crazy volatility going on in currency hedge or currencies at the moment, and we need these hedging assets, because how do you operate when your currency is fluctuating as much as even the New Zealand dollar is? So during these periods of high inflation, as we're seeing now, central banks typically increase their rates aggressively, just like we saw with the NZ today. And the greatest benefit of gold is that no one controls its value the same way that a central bank can just go, here's today's decision, and off goes the currency in either direction. So it just reminded me of that sort of zoom out sort of view of why we need to have a bit of gold in the portfolio just for some stability. And, you know, it's something that ultimately over time goes up in value, unlike your currency.
Sure. And so to summarize all that together, you would say that the New Zealand situation probably highlights that we're not really sure where we go from here. Is that how you would summarize it? That we don't really know what's next. So we might not have been expecting, or certainly they wouldn't have been expecting, that they would have needed to raise rates this aggressively a month or two ago. Like, it's something that sort of snuck up on them, I imagine.
Yeah, you got to think of it. Everyone seems to be trying to prepare for that pivot point. With this in the US, the inflation seemingly getting better. People are probably thinking central bank at least won't keep increasing, whereas New Zealand's in a completely separate situation where they've just gone the most aggressive they have the whole time. So who knows what factors change here, even in Australia? You really just don't know.
And that's where the gold play makes sense, because you've got something there that is a little bit of a hedge, and doesn't have to be a huge part of your portfolio, but it's something that allows for either outcome.
Yes, and it's a lot more certain than what a central bank decision might be.
Absolutely. And yeah, that's a really good point to end on, actually, because we didn't, and you said, you know, they saw that coming, but the rest of the market didn't necessarily see it would be that large. And I certainly don't know how that reflects in what we will see on the next Australian interest rate decision. Exactly. So there still remains uncertainty, and probably will be for a while yet.
Exactly, mate. Exactly.
All right. Well, thank you for that today. There was a lot of interesting stuff in there about our close neighbour. So we'll keep an eye on that as yet another piece of the puzzle, as we try and piece it all together to see what's happening in that big macro picture. So thanks for your help with that, and we'll talk to you again next week.
All a pleasure. Thank you, Chris.
All right. See you then.
Thank you very much, Josh. Thank you, Chris. And thank you to the audience for watching. And if you'd like to continue the conversation, head over to the Discord channel. That's discord.gg/gold. The perfect way to talk to Chris and Josh for the next 1 or 2 hours after the upload of this video. So they'll be there. You can ask your questions, get a response, and tell us your feedback. We always want to hear from you. And I always want you to subscribe to the YouTube channel. That's youtube.com/Ainslie Bullion for the wide range of informational videos that we post 5 days a week, including specials and much, much more. And while you're on the internet, you have to head over to goldsilverstandard.com, because that's bringing gold and silver into the digital world. As we say here at the end, balance your wealth in an unbalanced world. Take care, and we'll see you next time.